is we disrupted the normal cycle, right? The reason crypto winter, crypto spring, crypto summer, crypto fall, every 4 years we have that natural cycle and we get bull markets and bear markets, but every period, the low is higher, right? The total market cap of crypto just keeps growing. Why? That at some point, right, the Fed is going to realize they've made a terrible policy error. This will go down, when we look back in history, this will go down as probably one of the 3 great policy errors in the last 200 years. 90-year cycle, it takes a full generation for people to forget. And so here we are again on the verge, and not even on the verge, we're in a recession. Yeah. It's like a modest recession, like a 2001 recession. It's not the end of the world recession. But the Fed, I believe, has made an epic policy error by over-tightening and exacerbating the problem. And it's not just in the US. I mean, it's everywhere. Every central bank in the world has decided to try to defend their currencies, except the Japanese and the Europeans. But that's another story for another day. But look, what I was saying was when the Fed realizes the error of their ways and they hint, they don't even have to do it. All they have to do is hint that they're either not going to raise rates or they're going to get back on the QE train, which they will, right? Japan said they would stop QE in 2008. They're still doing it today. Yeah. Once that pivot happens, the Powell pivot, as I refer to it, there will be a face melter of a rally. And I said, we saw a hint on Monday and Tuesday. We saw back-to-back 3% up days. Yeah. And it's just short covering. All it is short covering. We have companies that are down 90, 95, 98%, and everybody's short. The problem is those are bear market rallies, right? There's never been a 4% up day in a bull market. Yeah. And it makes sense, right? A bull market is a market that goes up most days, but goes down sharply on bad news or perceived bad news. Okay. A bull market is a market that goes up most days and goes down sharply on bad news or perceived bad news. So what we had is a market that goes down most days since last November. And we had this good news or perception of good news. We didn't even actually have any good news. There was an emergency Fed meeting on Monday. Right. We didn't hear anything about it. They didn't make any declarations. They didn't say they're going to stop raising rates. All people did is say, well, Credit Suisse was on the verge of bankruptcy. Deutsche Bank on the verge of bankruptcy. When I'm talking about the face melter, I'm really talking about equities, the equity markets. Okay. All right. In crypto, I think we're spring, right? I think crypto winter ended on June 13th. I think we're in crypto spring, which will last through first quarter next year. Okay. And what does that mean, right? Well, crypto winter is where you go down a lot, right? And we went down, 70-something% peak to trough. Oh yeah. And we bottomed on June 13th. And now we've kind of bounced around the bottom here. And that's spring. Spring is, think about spring, right? It's cold, it's warm, it's windy, it's muddy. It's kind of, And so everyone's saying, oh, we're going to have this bull market. No. The thing about crypto, the reason sentiment's so washed out is Bitcoin is the cheapest it's been other than 3% of the time, right? In only 3% of 14 years has Bitcoin been cheaper relative to its history. Stocks could fall 50+% just to get back to fair value. The reason, if you look at a history, 14 years of history, Bitcoin is 0.0 correlated to bonds and 0.15 correlated to stocks, meaning the directionality of one has nothing to do with the other. 0.15 is a really, really low correlation. But everybody says, but Mark, November to June, it was 70% correlated. Yes, it was. Because what was November to June? November to June was one of the great liquidations of leverage that markets have ever seen. We had the most leverage in equities in history. Margin debt was the highest it had ever been. And we had the most leverage in crypto. In a liquidation, right? When Peloton goes down 95%, and you get a margin call because you bought Peloton on margin, you don't get to sell Peloton to pay back the margin because it's not worth anything. You have to sell bonds, cash, gold, Bitcoin. So what happens in liquidations, go back to March 2020, everything fell. But then Bitcoin rallied really hard off the bottom, up much more than stocks. Why? Because it's uncorrelated over the long term. But in those short windows of liquidation, where the leverage was coming out of the system, people have to sell what they can sell, not what they want to sell. Everybody says gold's supposed to do well in a recession. Well, it normally does, unless you have to sell it to pay back your margin debt, which is exactly what's happening. But here's the real issue. How many rate moves are going to solve the supply chain problems in China? None. You can't fix that. How many rate changes are going to fix the price of wheat coming out of Ukraine? Can't fix that. How many interest rate moves are going to change the price of gas coming from Russia, to what was coming to Europe? Now they bombed somebody, maybe we bombed the pipeline. Somebody did. So all of that is a moot point as far as I'm concerned. All the Fed funds rate does is liquefy the banks, right? That's what it does. Banks borrow from each other at Fed funds, and then they invest in the treasury market and arb the spread. That's harder to do today because you got an inverted yield curve, which portends recession. So I think they're closing in on that neutral place where then they're going to have to cut. Well, again, what does cutting do? It isn't going to change demand for credit. The big thing for me is earnings. We're in Q4. How are Q3 earnings going to be? Everybody promised us that they were going to be awesome. Microsoft said, we're going to be back to double-digit growth. Okay, let's see it. So, we're in every day. You see a headline of some big company making layoffs, right? Every single day. And, I've been impacted in my own extended family. People have been, furloughed. So I see it, and I see it everywhere. And this thing about jobs and the high level of employment, it's a little bit of fudged numbers. So two things. One, you got the people that every day 10,000 people turn 65 in this country for the next 17 years. And the problem with that is they take those people out of the workforce. So the workforce participation rate goes down, and then the quote unquote employment rate stays high. Well, that's bogus. Have you been in a Walmart lately? There's plenty of people over 65 that are still working. So the second thing is the BLS, maybe take out the L, makes this thing called the birth-death ratio. So about 70% of the jobs that have been created this year aren't real. And what do I mean by that? Well, I mean exactly what I just said. They're not real. It's like the farce of the IRS. They know exactly how much each of us owe them, right? Because if we don't pay that, we get fines and penalties. So why don't you just tell me and I'll pay it? Instead of having me prepare it or pay someone to prepare it. And then if I'm wrong, if I guess wrong, you fine me. That's a farce. That's a full employment act. So same thing is true here. And the idea that people hang on these jobs numbers. And then the last point I'll make is if you overlaid housing prices on that jobs opening,
look the same.
Where the head goes, the body follows. GDP globally is falling. Okay, that's a reality. It's truth. Earnings are going to disappoint pretty dramatically. But see, here's the game we play. So a year ago, a company tells me they're going to make $1. 6 months ago, they tell me they're going to make 50 cents. Last week, they tell me they're going to make 10 cents. And then they report 11 cents. and call it a beat.
Yeah.
Economy is incredibly resilient. We have tons of innovation. Recessions are amazing times for new company formation. Great companies get created at times when everything's stressed, and that's totally natural. And then the economy recovers. The problem we had starting in 2009 with QE is we disrupted the normal cycle. Right? The reason crypto winter, crypto spring, crypto summer, crypto fall, every 4 years we have that natural cycle and we get bull markets and bear markets, but every period the low is higher, right? The total market cap of crypto just keeps growing. Why? Well, because there's no one messing with the cycle. We don't have a bunch of old, pale, stale, male white guys sitting in a room dictating rates in crypto. It's driven by markets. And so the economy will recover. The cure for, overly ebullient economies is a recession. The cure for a recession is a recovery. So that's exactly, I'm not worried about that at all. I am still a little worried about zero COVID, right? Zero COVID in China, it's dumb. It's like super dumb. I think they're moving away from zero COVID because until zero COVID ends and we get the supply chain fixed, I look at where we are. Economy will be fine eventually. The problem is the markets. The markets are still way too levered, equity markets. They are still way too ebullient. We're still paying too much as a percentage of sales. The price to sales ratio for tech is still too high. And even though some of these companies are down 90%, they could fall another 90% just to get to fair value. I'm worried about equity markets. I'm not worried about crypto at all. Why? Well, because the innovation in crypto is extraordinary. The valuations in crypto are super cheap, right? We're at the tail end of the bear market, not beginning. And maybe we're halfway through the bear market in equities. Maybe we're 80%. Maybe the Fed will pivot and we'll get that face melter. And, I'll look silly for being cautious. But short of the Fed actually cutting rates, the economy is going to be unstable and earnings are going to stink.